With all that being said, let's get into um, the currencies. So first of all, starting off, actually, matter of fact, on the spreadsheet. So just understanding risk on and risk off sentiment, right? So this is the risk on RoRo guide at the bottom left hand side. That's the tab. Then we've got the economic data tab, and we've got the pairs tab as well, right? In case you're new, but just risk on, risk off. This is just understanding really where money typically flows into and out of overall, right? So risk sentiment is really important because investors really are focused on a few things. They're either focused on a yield, right, getting a return on their investment, and getting generating a yield on their investment, or they're looking to protect what they have, is what's known as, I guess, a safe haven, right? They want to put their money in a safe haven in times of fear, uncertainty, and doubt, and that really is the dominant theme for all markets, whether it's forex, whether it's bonds, whether it's commodities. It doesn't matter, right? Money will flow into and out of different asset classes, depending on what the sentiment and risk sentiment is. And so it's really important to understand that whenever you're whenever you're looking at a chart. And so this on this pair, I'm not going to go over everything, but you can have a look at really what typically and historically and usually happens with where money typically tends to flow into. So, for example, in a risk-off environment, commodity currencies like the Australian dollar, New Zealand dollar typically tend to go down. In a risk-on, when traders are looking for a bit more yield and want a return on their investment, then it typically goes higher, right? In currency land, it's really just about what's the higher yielding currency, and what currency is looking to, or what central bank, I should say, is looking to hike rates, right? Higher rates, and also as well where they are on their cycle, their interest rate cycle. And then you typically have, historically, you would have risk off. In a risk off environment, you would have the Swiss franc, the yen, and the dollar would typically, go higher. Traders will, put their money into these currencies, and then, of course, that typically goes, appreciates, right? Again, there are nuanced situations, right? So definitely be aware of the nuance. So this is just an overall guide, though, right? And as the nuance will be explained, day to day, as you're in the group with me. And so risk on and off, you kind of have to look at it as it's a scale. So it's not necessarily binary. It's not on or off. There's definitely varying degrees of risk. Think of risk as the most extreme form of risk would be, in recent times, would be something like COVID, where the world got shut down. That would be an extreme risk off scenario, right? Risk neutral is when you have I guess some fears. There's always going to be something going on in the world, some risk event, and then you've got when risk on, when really investors are really kind of just focused on getting a return and yield, right? And how can we determine that? What investors are doing is really by looking at this setup. And so what I have on my trading view charts, this is just one of the setups that I look at. And the top left is the VIX, the volatility index. The top right is the S&P. The bottom left is gold, and the bottom right is the 2-year Treasury yield. So they all tell a different story, but together it paints a picture of investors, whether prices are likely, prices, but the environment is more in a risk on, risk off, and what to really what degree, right? So top left, VIX volatility index is a measure of volatility, but also as well risk sentiment. And going back to kind of the scale, I would say look at the scale as 20 would be probably a bit more neutral, right? Anything below 20 would be seen as risk on. Anything above 20 would be seen as more risk on. Yeah. So 20 is the line in the sand. As we get more risk off, towards more risk off, and this has really been driven over the last day or two by the bond market, volatility, and the fears around the long dated bonds. The VIX, you can see, has kind of gone to the upside, right? So we're going closer towards risk off, and fear, uncertainty, and doubt. We've kind of calmed down, over the past maybe 12 to 18 hours. So that is an indication that there's definitely some fears coming into the market, right? But that's also confirmed by the stock market, right? So the S&P is the leading world stock market. Everyone kind of looks towards the S&P, and you can see at the same time we had this rise on the VIX. We also had a fall in the on the S&P so yesterday. So again, that kind of confirms in terms of risk off, because in a risk off environment, the stock market would typically start to fall sharply or rise sharply, right? Depending on, of course, the what the event is. And so when you see this sharp move to the downside, of course there are fears. Now, doesn't mean that those fears are going to last for forever and a day, right? No one knows, but depending on obviously what the market is concerned about, it could either end up being a sign that we may have reached the top of some point, right? Or maybe a bottom of some point, depending on, of course, the sentiment. But ultimately, we can kind of confirm that risk is probably rising towards the offside, by not only the VIX rising, but the stock market falling. Also, as well, gold historically is a hedge against inflation, but also as well considered a safe haven asset, right? And so at the moment, gold, you can see, is pretty much on this trend. This is the last month's price action. And so, we're at I wouldn't say we're at all-time highs, or are we? 1 second. Last 6 months. Oh, we might be. Let's do 1 year. Where's the yearly? Oh, why did it freeze? 1 second, guys. Sorry. Don't know why it froze up. Right, let's go to the last year. Oh, okay. So it has broken out then. Oh, interesting. Yeah, so we have broken out. Sorry, it is all-time highs. Okay, cool. So the all-time highs on gold, and that again kind of adds to two things really. One being, of course, money going into safe haven asset, but also as well, what's compounding, I guess, gold prices going to the upside is the dollar as well. The dollar being a weaker currency, and this is due to, again, rate cuts or expected rate cuts. So ultimately, gold is benefiting from both the dollar weakening as well as risk sentiment, recent risk sentiment, although we are, pulling back a bit as well. And the stock market has kind of jumped as well. So, and again, with bond yields, which again, we're going to get into a little bit later, kind of tell, again, just like gold, really a tale of two stories. The first one is interest rate expectations, what central banks are likely to do with interest rates in the future, but also as well, investor confidence in government debt. So not to get into a bond education, because you can go quite in depth in bonds, but understand that there's bond prices and bond yields, and they both move inversely. And so if you have a situation where bonds are government debt, right? So if investors for some reason don't want to buy government debt because they feel that maybe economically the country isn't doing really well, and so why buy government debt if you're not necessarily going to see a return, or it's going to be seen as more risky to hold government debt because ultimately government debt can be defaulted on, right? It's unlikely, but it can be defaulted on. But it needs to be attractive, meaning that, of course, if I'm holding long dated bonds, 10, 15, 20, 30-year bonds, I need to know today that, the government are implementing policies that will, the government won't default or go into some sort of, debt spiral where they can pay back their debt, right? So, if bonds, if you're looking to buy bonds, yeah, um, your the situation is, I guess, currently is more to do with, well, investors don't necessarily have the confidence in the UK government. So what happens is that bond prices end up falling because there's no it's supply and demand, right? No one's really looking to buy bonds, and so or they're very cautious on buying government debt, and so the price falls. And to make bonds more attractive to buy, then the yields need to go higher. And so, long story short, what's happening is that the 30-year bond market, investors are kind of being a bit spooked, right? So they're like, I don't really want to buy, government long dated government debt because I'm not necessarily confident in, the government policies for today, or I'm a bit uncertain. And so basically bonds aren't being bought, and if bonds aren't being bought, prices go down and then yields go up, right? So the 30-year, you know that's what the 30 year is basically saying, and again we'll cover that a bit later. But again, depending on the narrative, and what is actually happening in the market, you can determine whether it's bond yields are rising due to interest rate expectations, or whether it's fears about government, the economy, and whether the government can pay back. And that is really driven by understanding the front pages of the major financial and news outlets. So if you're looking at Bloomberg, you're looking at Financial Times, you're looking at Reuters, typically you can tell what is going on in the market and what the risk sentiment is if all of the news outlets, media outlets, have their front pages are focusing on the same story. Then that's really going to be telling. So for example, if there's a stock market crash, for example, then of course, and the front pages are talking about, you go to Bloomberg, you go to Financial Times, you go to Reuters, they'll normally have the front page. So that would be the narrative. If you have of course the three different sites talking about different, or have different stories as their front page, their homepage, then you probably say we're probably in a little bit more risk on, right? Because there's nothing really capturing the market's attention. So it's good to look at the homepages of the major financial and news publications to see what the overall sentiment is. So if they're focused on one thing, and you got a single story that's leading the headlines, then that's the dominant narrative, probably heading into a bit of risk off. And of course, that would be confirmed with by the VIX, or by the S&P, and by gold and treasury bonds, etc. Right? And if you have different stories, different headlines, then the market is not necessarily focused on one particular thing, right? And so we're heading probably more towards the risk neutral area, or maybe more risk on. Yeah. So with all that being said, let's get into the rates and current rates. Well, this is from yesterday, so I don't think it would have changed too much. I think maybe the Bank of England may maybe slightly different, but we'll try and get an update as soon as we can. But ultimately, what you're looking for is to look for the Fed, right? I will say the Fed, the central banks, really, and see who is not only looking the amount of cuts or hikes, yeah, that a central bank is looking to make, or what is expected, by the year end, but also as well where they are in their rate cutting cycle. So you have the Fed, who are expected to cut by 55 basis points at the moment, or as of yesterday, and they are expected to cut rates at their upcoming meeting. Whereas the ECB are looking to devalue their currency, right? Cut rates by only 7 basis points, which is pretty much nothing. And in comparison, and you've got no change, right? So you've got one central bank who the market expects to devalue, and one currency in the central bank which the market expects to, is happy or content or satisfied with their with the current value of their currency, right? And that's due to inflation targets. So, the euro dollar, right? If we're looking at it purely based on rate cuts and where they are in there and how many rate cuts are going on, right? You want to be a buyer of the euro, right? I'm not saying that the euro is going to be a buy every single day and it's going to go up every single day, right? It's impossible. But overall, what you want to be is a buyer on pullbacks, right? So if you get a level of demand, right, or a setup, a capture pain relief, or a stop hunt setup, and you get a pullback, then brilliant, excellent. That's what you're looking to buy, right? That's basically what this is saying. So we can now look at where all of the, what the expectation for all central banks are. And again, there is nuance to this, which we'll go into, especially with, the Bank of England. Just because, you're seeing this doesn't necessarily mean that it's a guaranteed buy, right? So, but on the face, given us on face value, you would say, all right, then, well, the Fed would be the sell, the RBA would be probably, actually, matter of fact, the RBNZ would be more of a sell, and everything else would look probably a bit more like a buy in comparison to these, right? So you would say sell, you would say, buy, buy, buy. You would say buy at the moment, and then you would say buy, and then you would buy the Bank of Japan, right? But again, remember, this is nuance. This is just on face value. This is what you would look to do, right? And then we obviously go into the details and we see whether the expectations are continuing to look like this, or if there's anything else we should actually know, and if there's potential changes on the horizon, right? But in terms of looking at your pairs, then you would say, all right, then let's say, for example, euro dollar would be a buy, right? The pound dollar would be a buy. You're buying the pound over the dollar. Dollar CAD would be a sell, for example, and you just go through it like that, right? So that's, again, a very simple and basic way to look at how to decide which currency you want to be a buyer or seller of, right? But then on top of that, now we need to get into the weeds. But also as well, this can also be confirmed by certain tools like the Fed Watch tool for the US dollar, and there are some others, but we can look at the Fed Watch tool for the latest. So it says here 91% chance of an ease, right? An 8% chance of no change right here. But and then if you go to SOFR watch right here, it will basically show you what the amount of cuts are expected for the next for the rest of the year, as well as when. So the market is currently pricing in 25 basis points in September, as well as 25 basis points in October worth of cuts, right? So anything changes, that is what we're looking for. But the changes will be really kind of determined by the data, right? So the data is always driven by the data. So anyways, let's get on to the US dollar, right? So the US dollar, I have a sell bias, but more of an auction range. And the reason why it's an auction range, I call it an auction a range because that's what it really is. But ultimately, an auction is, where you've got buyers and sellers doing business, right? Most traders will know that as a ranging or sideways moving market. But the market is an auction, right, between buyers and sellers. So when I say auction range, I mean basically the market should probably do something like this. But ultimately, what I'm looking for is sells at highs, right? If I just say auction range and no sell bias and no buy bias, and then what I mean is that you can sell at highs, but also you can buy at lows. But my overall directional bias is a sell at the moment. Now, again, this could change based on data, right? Because everyone's really waiting for Friday's non-farm payroll data, right? Employment data. So it says here that Powell highlighted inflation risks still to the upside, but stressed growing employment risks. Importantly, he said shifting risks may warrant adjusting policy, leaving the door wide open for cuts. So ultimately, it's been like this for the past, since Jackson Hole. And so the market is kind of holding its breath for Friday and seeing what the data comes out as. And if you go to the United States channel, I did post something in here that was talking about the expectations for the week. So it says here, I'm not going to read the whole article, but it says here employers in the US showed little enthusiasm to take on workers during August, and the unemployment rate probably ticked up to an almost 4-year high, adding to evidence of a more subdued labor market. And it says here, economists project around 75,000 jobs were added based on the median of a Bloomberg survey, while the jobless rate is seen at 4.3%. 4 straight months of sub 100,000 payroll growth would mark the weakest such stretch since the onset of the pandemic in 2020. Friday's jobs data from the Bureau of Labor Statistics will be a crucial input for the Federal Reserve officials ahead of their September policy meeting. Some are less concerned about the slowdown in payrolls growth because it's being accompanied by a decline in the participation rate. They're also wary of reducing borrowing costs when inflation is gradually increasing. So it says here from Bloomberg, what we expect non-farm payrolls to add 93,000 jobs, a modest improvement from July, and consistent with the story being told of a broad array of labor market indicators. We expect local government, leisure and hospitality and construction to drive improved hiring. So really the key to understanding the impact of data is going to be whether it convinces the central bank and the market really that the central bank is likely to continue cutting or potentially a hold, right? So if employment comes in higher than expected and high enough that the market starts to think, oh, okay, well, that's a great number. The Federal Reserve won't necessarily need to cut as much. Then, of course, that's really the key, or vice versa, right? If the number comes in terrible, maybe they might have to cut even more. And then you'll see the dollar start to either rise or fall, depending on, of course, what the data is saying. So, at the moment, I think everyone's holding their breath for the dollar at the moment. The dollar has pulled back quite nicely. So if you do want to get short, now is really the time, I think. What's today? Wednesday. Yeah, I think probably 2 days out, you can start to look for short trades in anticipation of a weak dollar. But again, if the data comes out, much better than expected, then of course you just have to, and you're in a trade, then I would just say exit the trade, as soon as you can, and just reassess your trade, right? You can go from a short if you want to a long, right? But even then I wouldn't necessarily even do that because personally I like to buy at discounts, and that wouldn't be the discount. If prices went continue going higher, then what I would do is just wait for a pullback, because there are always pullbacks. You can look back historically, and even though it might seem like there might not be one, there's always going to be an eventual pullback, right? So ultimately that's what I would look for. If the data surprises and it comes in really good, then of course I'm looking for a pullback into a demand zone before looking to go long. But if you do want to position short, then everything actually is lining up quite nicely technically for a short on the dollar. Welcome, Mark, by the way. Welcome. Not sure which Mark that is. Is that Mark Bentley? Or I don't know. I'm not too sure. There's another Mark, I'm sure there is. But welcome nevertheless. So the dollar at the moment, sell bias, technically it's pulled back to a nice sell area, or confirmation in terms of the equally weighted dollar. So again, as I was saying earlier in the call, this is the equally weighted dollar index. So this is the dollar equally weighted against the pound, the yen, the CAD, the euro, the Australian dollar, New Zealand dollar, and the Swiss franc, right? So ultimately, I want to see, when I'm looking to buy or sell currencies, I'm looking for the indications that the currency overall equally weighted is either strong or weak, right? Is it discounts or premiums? So supply or demand zones, or support and resistance. So support and resistance. So that's basically what I'm looking for. And before I even look at a price chart, right? So that's where we are with the dollar. Still sells, but again, Friday will be D-Day, and so you can look to enter the trade. And if the data does come out disappointing or confirms that the Federal Reserve is still good likely to cut rates, then of course you can look for short trades, or you'll already be in one, or you can wait until after, right? Um, the data confirms. Oh, it's the other mark. Okay, no worries, mate. Um, yeah, you can kind of, wait until the data comes out and then trade after the fact. But of course, that will eat into your risk reward because there's going to be a load of traders that are going to get in ahead of you. It's basically who pulls the trigger first, whose order gets filled first, and if it's a surprising number, you could get slipped by, either to the positive or to the negative. But ultimately, you're trading with everyone else, right? So they say fortune favors the brave, not saying that it's always the best idea to get in before news, but of course, that's why we manage our risk, right? Maybe enter a small position beforehand, and then you can always add in after the data either confirms or doesn't confirm, your trade direction. The euro buy bias, definitely a buy bias, especially after I think yesterday's. It says here yesterday's slightly hotter than expected, but the day before I think it was Monday's. Slightly hotter than expected core inflation numbers in the euro area brought the 2-year euro swap rate back above 2.10%. The implied probability of an ECB cut by year end is now only 1 in 3, so about 33%. While we think that is too conservative, it may take some time for a dovish repricing and any negative euro impact to materialize, considering multiple reiterations by the ECB officials that they are in a good place when it comes to rates. So ultimately, the European Central Bank are looking to hold rates. That's obviously been reflected in the expectations. And so the euro at the moment, and by the way, this is from ING Bank, this summary. The summarizer, our GPT summarizer by WJ isn't working at the moment. I did reach out to WJ. He hasn't replied back to me just yet. Hopefully he'll get back to me soon. So if you are a user of the GPT summarizer, which actually was really helpful, to be fair, we have to just hold on a little bit. If I can't get a hold of WJ, then I think I may have to make my own summarizer, right? My own GPT summarizer, my own GPT agent. So if anyone is interested in helping me do that, assisting me in doing that, then yeah, definitely just send me a DM, and yeah, we can kind of work together on that, because I have no idea. And by the way, someone who is who's maybe made some GPTs before, by the way. So because I have no idea. I mean, I have the information, but I don't know how to program it. So yeah, I guess I could definitely learn, but it'd be easier if someone has done it before, so could guide me as to what how to kind of program the GPT. So if you are familiar with programming an AI agent, then definitely reach out and we can kind of work together on it. This is providing that WJ, doesn't get back to us anytime soon. Anyways, so the euro for now should be really on the buy side. So when we're looking at the indexes, I would say, yeah, again, you want to be a buyer when the euro is on the cheap side. So as we pulled back last week, this was last week, Tuesday, Wednesday, Thursday, those days, that was where you wanted to be a buyer with the RSI as confluence. And so looking at buys around here on the pair, of course, now we're in the expensive area, discount premium, so you really want to wait for at least a pullback for the euro overall to be at least on the discounted side before looking at going long. The Japanese yen. Oh my days! Every time I take the trade on the yen, it always looks positive, and then there some government official, some Ueda will come out, some finance minister will come out and just end up being dovish, right? So entered into a yen, New Zealand yen trade, which is a break-even trade now anyway, but I don't expect to make profit on that one Yeah, I expect to probably be stopped out at break even. But got into it thinking that, we were looking to buy the rumor. Everything looked good last week in terms of buying the rumor. And now we've got some political issues which could affect the bank hiking rates. So it says here Japanese stocks fell, led by banks as uncertainty around the fate of Prime Minister Ishiba dampened expectations of a near-term rate hike by the central bank. So political jitters ramped up after LDP Secretary General Moyiyama, Ishiba's key power broker, said he intends to step down on Tuesday. Local media reported that other senior LDP members, including policy chief Onodera, are also intending to quit. So ASO is set to call for an early party election, according to a Mainichi report. Many investors had been expecting a rate hike in September. So that's news to me because I thought it was really going to be October. But I guess investors, some had expected maybe one in September. But if politics becomes unstable, that will be unlikely, says Tamura, an analyst at Osakan Securities. The lower likelihood of an interest rate hike boost for banks has disappointed investors, leading many. Sorry, one second, guys. Okay. Right. It says here. Sorry, where was I? Yeah, the lower likelihood of an interest rate hike boost for banks has disappointed investors, leading to many lock in profits from the financial sector. Tamura said insurers shares were also weak. Traders are seeing uncertainty building around the political outlook for Japan, which is jacking up volatility, said Anna Wu, cross-asset investment strategist at Bennick in Sydney. So overall, basically, there was some, political risk has kind of pushed back the expectation of potential, rate hikes, which is not good for our trades if we're looking for to buy the yen, right, which we were looking to. So I've kind of changed this. I would, last week it was buy the rumor because there was rumor that, the Bank of Japan were being a bit hawkish, which they were. Inflation is still high. But then, all of a sudden this has kind of come out of nowhere. And so when something like that happens, there's nothing we can do, right? What can we do? Sometimes news can go in our favor. Sometimes it can't. But it says here, I put here political uncertainty, sell, right? And then buy the rumor on rate hikes. So at the moment, we're in that political uncertainty sell, which is, I think, the fresh news. But once we get back to, once that sorts itself out, then it will be a buy the rumor on rate hikes. But the main narrative at the moment is political uncertainty, as well as the bond yields as well, the long dated 30-year bond yields. That's another issue across Europe as well. I think the French bonds, Japan, there was an article on it I posted earlier today. So there's things going against the yen, a lot of uncertainty going against the Japanese economy and the yen and bond yields. So although I think the yen is a little bit more will be a buy, it's just all these things that have come out now after I've taken the trade, aren't positive for the trade. So luckily I'm at break even, so can't lose any money. I'll just stay in until I get stopped out or until I make some money and trail my stock down. But if you're entering into new trades, I would say probably be wary of buying the yen. The yen does look like a nice buy at the moment. It has pulled back a bit. Actually it's pulled back over let's look at the last hour. Oh, okay. So we jumped up a bit. So that's quite nice. Hopefully nice for my trade, which we'll go over a bit later. So yeah, I would say it's a bit of a tricky one until the dust has kind of settled with the political stuff. I would say if you are still looking to take any yen trades, enter in at definitely a smaller position. That would be my advice. British pound. So the British pound, of course, I would be saying over the past, maybe week or so that, there was government fiscal issues, right? And now that kind of played itself out with the bond market. The bond market is now a bit worried about the government budget, fiscal budget for the UK, Labour's budget, and Rachel Reeves from accounts. She, whatever, she kind of releases, and is it going to be good for the economy? Is it going to help the economy, or is it not? Right? Well, actually, more importantly, for bondholders, is it going to mean that the policies are going to give confidence for bondholders to want to buy bonds? Right. So it says here the reaction to gilts. Gilts are basically another word for government bonds, the UK version of government, of like treasury yields, government treasuries, gilts. So reaction to gilt sell-off looks a bit overblown, and this is again from ING. The pound had a rough Tuesday as back-end gilts yields rose, with the 30-year hitting its highest level since 1998. It's important to note, though, that the long-dated bond sell-off was happening across Europe yesterday, and gilts didn't underperform their peers. We take a conservative view and don't expect the pound to fall much further on gilt moves alone. While the rise in back-end yields is getting a lot of attention amid scrutiny of the UK fiscal situation, much of the increase is tied to higher inflation and hawkish repricing of Bank of England rate expectations rather than fiscal worries. So that's more stagflationary fears, where you've got you've got a potential contracting economy, but you've got rising inflation. We're not optimistic on the pound, as we still expect the Bank of England to cut rates by the year end. And it says more here. There was a link, but the moves in the back end gilts don't seem dysfunctional and don't justify a persistent risk premium on sterling, especially given the UK government's likely fiscal consolidation plans. So I think everything's kind of calmed down a little bit, and that's kind of confirmed, I guess, with you seeing the VIX, kind of pull back. Stock market move to the upside. Of course, gold moving to the upside just means, really, I think, is again a function of potential risk sentiment, but also as well more driven by expectations of rate cuts, which is, you can see on the 2-year Treasury, you've got that big drop over the last maybe a couple of hours. So I would say that the pound, I'm still probably a bit more bearish on the pound, right? And although I've got it as an auction range, I think I said that the bond market, due to government budget concerns in November, indicates a sell. And there's, there was some other data. Where did I see it? It was in the UK channel. So the UK channel was here, and I did post a couple of things, right? So this was about a couple of hours ago. It says here, bearishness on the pound is growing. So our colleagues at Vasilis Karamanis noted that options bets on the pound over the next month are at the most bearish since mid-February. And IG Group said that short positions taken against the pound on this investment platform by international clients surged by more than 150% on Tuesday. They more than doubled. For UK clients too. So again, the investors are more longer have a more longer term view, medium to longer term view on these things, not necessarily day traders who are trying to, scalp and get in and out in one or 2 days. So when they put in their money, they're doing it for the medium to long term, right? So from that perspective, it's hard to kind of buy the pound. I'm seeing price action do a bit of a reversal, of course. The VIX is kind of calming down, but the way that I look at it is that you've still got uncertainties around the budget. So until the budget comes out, there's going to be uncertainty, which is going to cap the upside for the pound, right? So, we could get a bit of a move to the upside, right? We could see prices move up, but how far is prices going to move to the upside? It's going to be unlikely we're going to see any kind of sustained strength in the pound until the market knows what the budget is going to look like. So any moves to the upside now, I think, can be used as shorting opportunities, right? That's really where my bias is until we get clarity. So that's what I'm seeing. So we could see the next day or 2 or 3 or 5, where prices are moving to the upside. That's cool. That's fine. But that just means that I can look for, more of a short when I feel that the, technicals are lining up. And the pound, I think I'm leaning definitely, say I think, but I'm definitely leaning towards more of a sell, right? And as I said, it's because nothing's going to get resolved until the budget kind of comes out. So that's really where I am on the British pound. Although it does technically look on the cheap side, does look technically on the cheap side. Looks like a decent buy, right? But yeah, again, you're gonna have to be a very brave buyer on that one. So, anyways, no reason to really. I say, well, not enough of a compelling reason to buy the pound for me at the moment. The Canadian dollar, I think it should be a bit more of a sell. And it says here, second quarter GDP contracted minus 1.6% annualized, weaker than expected, but consistent with Bank of Canada's own forecast. Weakness was export driven, reversing prior gains. Domestic demand remained resilient, though market speculation, it says here, Bank of Canada could cut as soon as September, but more likely to move at the October meeting unless August CPI and jobs data come in very weak. So really the CAD is a bit of a bearish bias. The contraction reinforces Bank of Canada easing expectations, though resilience in domestic demand tempers the urgency. So short-term CAD impact muted, but muted until labour market and inflation reports clarify the policy path. If those reports undershoot, CAD could weaken sharply on rising September cut odds. So I think the Canadian dollar at the moment is leaning definitely towards more of a sell. There was something that Spencer had put in the chat as well, and I thought this was confirming. Where was it again? This was it. So he said, comments on the latest survey results. Paul Smith, economic director at S&P Global Market Intelligence, said Canada's manufacturing economy continued to struggle in the face of tariffs and uncertainty in August. New orders and employment all recorded slower falls compared to July. So I said, the CAD is a sell at these levels, and I said, showing the CAD index, the divergence that's going on, even though it's making higher highs. There's divergence on the RSI, which is used as a reversal signal, right? So ultimately, looking at the CAD, yesterday we're seeing a bit of a sell-off today. So I think you can look for actually sells. We're in that, we're in this kind of supply zone, nice supply zone. So I think we're at definite expensive areas. So I do think it can be a sell. That's what I'm leaning towards. And then you've got the Australian dollar. The Australian dollar had actually some good news this morning. It was kind of overshadowed. I nearly missed it, matter of fact, because everything else that was going on. But it said here, Australia's economic growth accelerated in the second quarter, led largely by household consumption and reinforcing the case for the Reserve Bank to keep interest rates unchanged later this month. So that is definitely bullish, right? Gross domestic product advanced 0.6% in the 3 months through June, faster than the predicted 0.5% and double the upwardly revised pace in the prior quarter. Data from Australian Bureau of Statistics showed Wednesday. So it says here, money markets stuck with the expectation that the bank will stay on hold in September and cut in November while reducing easing bets for the first half of 2026. So they're reducing easing bets, meaning they're reducing the bets that the central bank will want to devalue their currency further into the future, which is supportive for a currency, right? So the Australian dollar, I did say buy in short-term buy from the last couple of weeks. I was in that Aussie dollar trade, which ended up being a nice profitable trade. Got stopped out on a trailing stop. But I think any pullbacks on the Australian dollar are likely to be buying opportunities now. So like I said, any pullbacks, at the moment it's on the expensive area, right? So any pullbacks to a level of demand or a level of support and resistance, I think should be decent for a potential buy. Yeah, so you can see long term that's been a bounce, level in between here, a little bit wishy-washy, but you can see if it pulls back and again you get the confirmation of the RSI, then I think that should be decent for a buy trade. Also, as well, so I think supporting that is going to be is China's I think growth as well. The New Zealand dollar is a sell bias. So, of course, we had, I think they cut rates last week. I say, I think they did cut rates last week, but um, they were also very dovish. And so the data isn't supporting rate holds. And so nothing's really changed from last week. But to go over this for the new traders, it says here that the RBNZ had cut their OCR, which is their interest rates, by 25 basis points. And there was a historic split vote. So two members wanted deeper 50 basis point cuts. First time dissent has occurred in RBNZ's history. Markets now pricing in further cuts with an 80% chance of OCR at 2.5% in coming months. Interest rate curve shifted lower across the board. RBNZ's lowered OCR track signals strong dovish intent. So economists now expect two further cuts as early as October and November. So previously expected later. So again, when the market starts to price in more cuts, then that is bearish for a currency. So that's bearish for the New Zealand dollar. Sharp decline already seen. Market repricing toward deeper easing pathways on currency. October and November meetings now live events for additional easing. The central bank is signaling willingness to stay ahead of the curve, stronger dovish bias than markets had expected. So again, looking at the New Zealand dollar equally weighted index, we kind of pulled back. I was saying this earlier in the week. We pulled back to an area where I think, the New Zealand dollar really should be a sell, not necessarily, up into this supply zone or this area of support term resistance. But I think on the RSI, it's definitely above the 70, which is considered on the expensive end. So it's a tricky one because, of course, you always want the confluence of some sort of level of supply or resistance. But I looked at this as though it may not get all the way back up here. So I took obviously a position on the New Zealand yen. And so yeah, I still think that the path of the resistance should be to the downside. Of course, it could continue going higher, but if it does reach up to these highs, then I think that's just going to be a better sell, really. So nothing really much more to say about that. And the Swiss franc finally. So the Swiss franc, again, it's in a risk-off environment. You would think that it's a buy. In a risk-on environment, it's a sell. With the bond market, jitters going on in the market, you would think that the Swiss franc would be a bit more of a buy, but their second quarter GDP growth only grew 0.1% quarter on quarter. It matched estimates, but growth was driven by services while industrial production and exports fell. The US tariffs, so Trump's new 39% import levy on Swiss goods, effective from this month, or I think that was maybe last month, from August, last week of August, into September, is the steepest ever on a developed economy. So a front loading of exports in Q1 helped soften the blow temporarily. So basically, GDP lags, right, in terms of the data. So it takes around a quarter or 3 months for economists to work out what GDP was, which means that we're in the third quarter right now, right? It's September, so we're in Q3. So it will take economists this month or this this quarter in the third quarter is when we will get Q2's data. We're not going to get Q3 data this quarter. We'll get Q2's data because of the sheer amount of information that economists have got to go through in order to calculate a country's GDP, right? So this September, October, November. So by November, we will get Q2's GDP data. And that is likely to show the impact of the tariffs, right, on the 39% tariffs, because they still haven't negotiated that down. So ultimately, looking forward, you can kind of see that the Swiss franc economy is likely to suffer unless, of course, they get some sort of deal soon with their tariffs, right? And so ultimately, it says here Switzerland can avoid a recession in the near term, but 2026 growth outlook looks weaker due to the tariffs. So if farmer exports are targeted, recession risks rise sharply. So of course, like I said, the 39% tariffs, and if their pharmaceutical exports are targeted by the US, then recession risks rise sharply. So it's difficult to buy the Swiss franc based on a that risk that's going on, and B as well, they're one of the lowest yielding currencies. So if traders are looking for a bit more yield, then buying the Swiss franc isn't necessarily attractive, right? But it does hold its value as a hedge against inflation. So I won't get into that now, but just know that it's an inflation hedge, just like gold, more so than the Japanese yen. But let's see what happens. But my bias is looking for more sells than buys, unless risk off really does start to ramp up and is sustained. So again, looking at the index, the Swiss franc, a bit middle of the road at the moment between his highs and his lows. The RSI is, really below the 30. If you were looking for a sell, you want to see it above the 70, but also as well at a decent area where we're seen as it being expensive. So we could see it somewhere around these areas before looking at going short. But of course, if you are looking for a buy, then right now actually is a decent buy. Let's look at what it would look like over the last month. So the monthly high and the monthly low, we're not even really at fair value. Fair value would be somewhere around 50%, somewhere around here. So if you are looking to buy the Swiss franc, I would probably wait for it to come down to this area here before looking at going long. But my bias is to definitely look for more shorts on the Swiss franc for now. If I'm going to express buying an asset based on risk off, then I'm going to likely buy gold and silver rather than the Swiss franc. So, but that's just me. So that's where we are in terms of the fundamental side of things, and the nuances, right? And so looking at the fundamental analysis spreadsheet, which we look at certain data from GDP, quarter on quarter, interest rates, inflation, and some others. We based on purely on the data, it ranks the currencies, right? So typically you would normally say that anything that's ranked 1 is a buy, right? And anything that's ranked number 8 should be a sell, right? But that's not always the case. And again, if you've gone through the course and the channels, then you'll understand about the currency value cycle, right? Currency value cycle is very important. So based on our fundamental bias, although yes, we do have the dollar as ranked number 1, is it number 1 that is likely to continue appreciating, or is it ranked number 1 that is likely to continue devaluing, or is it a little bit middle of the road, right? Is it like in an auction phase where you can look for buyers or sells, right? So at the moment, it does look like it's on this end of the currency value cycle, based on, of course, everything that we've looked at. Now, that could obviously change based on the jobs data on Friday, right? If Friday comes out, spectacular jobs numbers, then, of course, we could see a reduction in the expectation for rate cuts, which would then mean that the dollar would probably be more on the appreciation end. Right. So there's that. Now what's number 2? So number 2 is the Australian dollar. So that's on the buy side. Number 3 is the United Kingdom. I think it's on the sell side. 4 is Japan. 5 is New Zealand. 6 is Euro. 7 is Canada, and 8 is Switzerland. So when we're looking at the currency, looking at currency value, you would have to say that number 1 is the dollar, would be on this side. The Australian dollar is number 2, so it'd be on the appreciation end. Number 3 was the pound. I would say it's definitely on this side. Number 4 was the Japanese yen, and the Japanese yen, I would probably say at the moment it's just although I'm in the New Zealand yen trade, I would probably expect the in the short term the yen to kind of to devalue based on political uncertainty what we went through. But I'm hoping, of course, that we end up on this side, right? So let's see. But if I was looking to enter into a new trade now, I'd probably say it's on the devaluation end. Um, Unless, of course, the market kind of looks past all that political stuff and they sort that out sooner rather than later. Number five was the New Zealand dollar, and I think that it should be five should be on this side of things, so it should be down here. So that's the New Zealand dollar. Number six was the euro, so the euro I think is on the revaluation end. Number seven was the Canadian dollar. I think the Canadian dollar is likely on this side of things, slightly anyway. And then number eight was the Swiss franc, which is again going to be on this side of things. So ultimately, you're looking to buy divergence or convergence, right? So at the moment, the currencies to really kind of buy looks like this. It's just the Australian dollar, right? The Australian dollar is definitely the most positive one at the moment, and the euro, sorry, I should say, right? So you've got that, and you've got the euro. So the euros is a buy. Everything else in terms of the dollar. So the dollar, would be ranked number one. So that's more of a convergence trade, right? So if that's the dollar and that's the euro, right? You've got one on the devaluation end. You've got another one on the revaluation end. That's more of a convergence trade, right? And then you can basically do euro versus everything else that is a sell, right? So euro versus New Zealand dollar, euro versus the Canadian dollar, euro versus the British pound, for example, right? GBP, right? So that would be what you would do. And then you can do the Australian dollar number two versus, the dollar, for example. And you could do it against other currencies as well, right? So it's easier now to kind of figure out what pairs you want to be a buyer and seller of, right? And you're looking for the biggest divergences and biggest convergences. So the weakest currencies versus the strongest currencies. So once we know that, and we know, where we are on the currency value cycle, we can go to the pairs and then just look at the pairs, right? Look at the pairs. So 1 second, let me just come out a little bit. Zoom out a bit. Well, I zoom in. Zoom out. Actually, let me do one. And yeah, it's a bit better. Right. So again, from last week when I was looking to buy the yen, this was definitely more of the weaker short side. But now I think this week, because of the unexpected political risks, it's going to be a very hard trade to kind of look to buy the yen. I think from a technical analysis perspective, it's nice. It's on the cheaper side, but I think the political risks are make it tricky to kind of enter into a new trade. So this is the trade that I'm in at the moment. So it's going my way, but it keeps bouncing higher. So I've managed to get involved in this, and this was really there was more of a CPR trade, right? So this box here was more of the CPR because we had a level where it had touched once, looked like it was bouncing higher right there, and then it collapsed. So traders who would have got long in and around this area based on that support zone collapses on them, and then capture pain, and then by the time they get to that relief, it adds to the supply and demand equation. So that's really where I am. My entry, I spoke about this. I posted a video in the group call about this. So you can go not in the group call, in the discussion room. So I went over the trade. This trade is now a break even trade. So my stop loss is at 87.33, somewhere around there. I've made profit on one of these trades, which has managed to get me to break even. So I'm just waiting for this, hopefully, to kind of roll over. If it does, then brilliant. If it doesn't, it's okay because I'm at break even, right? No sweat. I won't lose any money. So that's basically where we are. But while I'm in this trade, if fortunes reverse and the Bank of Japan decides to become a bit more hawkish, then of course that's going to help this trade, and I'll get some good risk reward, right? Some decent risk reward on this trade. So that's where we are with the New Zealand yen, but again, it's going to be very, very tricky to kind of to enter on the yen. Although, yes, the yen, when we look at the index, is pulling back a bit, right? We do have a bit of yen strength right there. Um, Even then, I think on the daily, 1 second, on the daily, let's go to the daily, and the daily New Zealand. Yeah, New Zealand, as I said, it's kind of like the second day in the RSI below the 70s. So it's a bit of a trickier one to I wouldn't necessarily look for any new trades now. If you didn't take the trade before, now is really not the time. You'd have to wait for this to now go back up above the 70 before you start to look for a new trade if you are looking to get involved in this. But ultimately, everything is lined up very nice technically. Just need those fundamentals and risk sentiment to come through on that trade. The Euro New Zealand should be a long, and I have it as probably a week long, and I think that's probably based on that was more based on the French elections, which don't seem to be in the newspapers at all now. I think they're looking past that. So Euro New Zealand, right? Technically, Euro New Zealand, where are we? Should be on the long side. I was saying that you could have taken this in the weekend video. Definitely seen, a bit more of a pullback. Could see a little bit of a pullback here. I think if it does pull back anywhere around here, that'd be nice. But the problem was that the euro was on the expensive side, right? So although technically, and this is what I was talking about before, if you were looking to buy the euro, it should have been really here. Right now, the euro is in an expensive area. The New Zealand dollar, as you've looked at already, isn't necessarily the most expensive. So yeah, you want the euro to be cheap, you want the New Zealand to be expensive. So right now, not really a trade. I think the opportunity should have been on the last week Friday to buy here, but or at least on the Monday morning to the upside. But I think for now, the opportunity is gone for now. There's always going to be opportunities in the future. It's just really pulling back. If you can get a decent pullback and the euro become more of a bargain and the New Zealand become more of an expensive currency. Pound New Zealand. So again, I'm probably going to take this off because the pound, not really a buyer of that. New Zealand Swiss, tricky one. I think if risk off comes on the market, then that could be a candidate. But for now, I'm going to leave it off. Dollar yen. I think the dollar yen, I think it all depends on what happens tomorrow. No, sorry, on Friday with the jobs data. I think that's going to be the key jobs data. But for now, I'm probably going to be neutral because I'm not really going to be entering any new trades. Euro dollar should be more of a long, but again, it depends upon the data on Friday. So Friday, let's look at it technically now. Euro dollar. So again, we've kind of just nearly. No, that's not it. Sorry, 1 second. Euro dollar. Right, that's it. Right, so euro dollar right here. So kind of didn't. Well, we did. This was a demand zone. It made kind of higher highs, but we didn't quite come into what we just did today. But I think it's gone. Actually, no. I guess you could look for a buy, but let's just double check. Actually, no, because you can't because the euro isn't on the cheap side, right? So you can't buy well, I wouldn't anyway. You can if you want to, but I'm not necessarily looking to buy the euro. I want to buy it when it's cheap. The dollar is on the expensive side though, so that is decent. So you can look for actually a sell on the dollar, just not against the euro. You need the euro to be on the cheap side for sure. So you've got to look for a currency. If you're looking to sell the dollar, then you've got to try and find a currency that is a bargain price, right? And it's going to be tricky or even tricky. I don't think there's going to be anything available because the two currencies that we're looking to buy, which is the euro and the Australian dollar are both considered expensive at the moment, right? So there's nothing else unless you're going to take a chance with the yen, right? I think that's the only other currency you can possibly take a chance with, that would be considered, on the cheap side, or maybe even the Swiss franc, because the Swiss franc I think is on the cheap side as well. But yeah, so euro dollar not really a trade at the moment until certain things line up. Pound dollar, again, I'm going to take that off for now. But that could actually even be a short trade in the short term based on Friday's data. So let's have a look at that. Pound dollar, right? Pound dollar, yeah, we could look for actually a decent. I don't know if it will get up this high, whether it will move that amount of pips, but it would have to move at least about 70, 80 pips by Tuesday. But even then, nothing's really lined up technically. So nah, not really a trade to take. Although I do like it from a fundamental perspective um if the dollar is, a bit more of a buy, but technically it just hasn't set up. So nothing there for now. Aussie yen, I think you can probably look for at least a short term long trade on that and buying the Australian dollar, over the yen. The yen weakness continues, but again, this is definitely be more in the short term. But look at that, you'd have to wait for a pullback. Move's already gone. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight days of bullish price, which technically you would expect at least some sort of profit takings or pullback. But yeah, when it comes to actually buying, you definitely need something, around, to here to kind of support the trade. But there's nothing at the moment, so unfortunately, no trade. Although uh, fundamentally, I think it's a decent buy in the short term, as you've got, one country who's got some uncertainty, and you've had some good news about GDP with the Australian dollar. So that should be nice fundamentally. Dollar Swiss, I'll leave that. Although again, it could be, the dollar could be a potential buy, or it could be a sell, right? Depending on, of course, what happens um, on Friday. Euro Aussie, no. Pound Aussie, actually, that could be actually a decent short. It could be a decent short, right? Buying the Australian dollar over the pound. Uh, so the move's already happened. So you'd have to wait for a pullback into that supply zone there before looking at a short trade. And then you'd need to see the pound as being a bit more on the expensive side, and the Australian dollar pulling back to more on the discounted side. But I think that's actually quite nice. If we do get back up there, CAD New Zealand, nope. Aussie Swiss, yeah, still more of a week long for me. Aussie Swiss, but again, look at that. Just got to wait for a decent pullback. So that continues to be a long. CAD yen. So I did kind of analyze this as well this morning, and it's looking actually very nice for the sell. So again, if you did get into this, then you should be in some profit, right? So definitely, again, I went over this this morning, posted the video in the discussion room, so you should be in some profit on this one. Unrealized profit, well, definitely bank some profit on that position there, but at the moment you're in unrealized profit, and so your next target should, depending on whether you're looking for a one-to-one or looking to hold it, would be somewhere around here. So that's another target to look for, and then you would then be in a position where you can hold. You would have won two, and then you're just looking to hold this, depending on, of course, your risk. Or you can hold the two, right? You can hold that one as well, and then see if you can maximize two positions, and see what goes on there. But yeah, so that stop hunt working out very, very nicely so far. Stop hunt setup. on the CAD yen. But would you enter into a new short? I don't think I'm entering into a new short until sentiment changes. Euro CAD should be again more of a long trade. Euro CAD. Let's get. Oh, okay. Euro CAD pulled back a bit. So, yeah, the reason why I didn't kind of get into this was because we didn't really have any technical setup here. Actually, no, we did. There was some divergence here. So you can look for a divergence trade there where the RSI is making higher highs. So actually, that was nice. But the problem was that the euro was on the expensive side, right? It's up here. So if you were looking for a buy trade again, you should have been buying probably last week, Wednesday, Thursday. Let's look at the CAD. Right, so the CAD was expensive last week as well. Yeah, as we got into that zone. So again, you had a cheap euro, an expensive CAD. The only problem was is that it didn't quite come into the demand zone. But if you're maybe 8 pips away, you can always take a little bit of a chance. But yeah, ultimately, I think that was a really nice trade, and that actually would have been decent for a buy, right? Last week, you definitely, well, we should be in at least a break even on that trade, depending on how you entered and where your stop loss was. But yeah, should be long trades on that. Dollar CAD, again, interesting only from the perspective of what happens on Friday. Aussie New Zealand should be a definitely now, not even a week long because of the recent data, should definitely be a long, strong long. And yeah, you can see that just happening, right? We've been trying to wait for a pullback for a while, but it just hasn't happened yet. Eventually, it will. Just need that opportunity to look for a short trade, right? I'm sorry, a long trade. So that's where we are with that. Where are we now? The pound CAD. I'm gonna remove that. I'm gonna CAD Swiss. No, Aussie CAD should be. Yeah, we've had it as a week long. I think it should be more of a stronger long now after the Australian dollar. Um, After the Australian dollar data. So again, waiting for really a pullback that's created a higher low. So that is high, higher low. So basically a pullback into somewhere around here. Although that's a wide area. Ooh, not that one. That's a wide area of demand. You still would wait for really, I think, a move back down into the lower end of this demand zone. So you're looking at somewhere around here because you've got a level of support. And then I would probably look for, again, like some sort of 80% discount from that high to that low. So somewhere around here, or at least at the bare minimum, 50%. So that's what you're looking for in terms of a buy. But again, you'd need the everything to kind of line up technically on that. The pound Swiss. So pound Swiss, obviously last week looking for short-term longs, but that has definitely changed now. I'm going to take that off the table. Swiss yen, looking for a short on that, and I think I'm going to take that off the table as well. The Actually, a matter of fact, I did, just to again highlight, um, go over that as well. I did actually get a full stop out on that. I was about 2 or 3 pips away from a break even, and it just reversed on me. I think that was on the early Monday or Tuesday when the Prime Minister came out and said was pretty much dovish, and yeah, it kind of put an end to that trade. So I did lose that. I was looking to get back in, but then obviously the Japanese yen isn't necessarily a buy right now, so I'll have to just wait until that does become a tradable pair. You, sorry, Euro Swiss should be a more of a long Euro Swiss. Yeah. So again, the opportunity was last week where you had uh yeah, it was right there on the what's that? The Wednesday, 27th of August. That was it. That was the trade right there. Nice. Everything lined up perfectly. Euro was on the expensive side. Sorry, on the cheap side. Swiss franc was on the expensive side right there. Everything lined up on the Swiss franc. So then there was a buy, right? That was it. That was the trade. That was the trade. Very nice. On that, technically, I was obviously talking about this, I think, in the weekend video. So that could have been a nice buy uh, to go long. The New Zealand dollar, US dollar, nope. Australian dollar, US dollar. I think that's again. This would depend upon. It would depend upon what happens Friday. I was in along on that. I managed to get my trailing stop out, which was a profitable trade overall. So that was quite nice. But again, depending on what happens Friday, ooh, the the Australian dollar is on the expensive side anyway. So I can't. Yeah, I wouldn't even. I don't think it's going to pull back in 2 days. So um, until the Australian dollar pulls back and until we find out what's going on with the dollar, not really a buy at the moment. The Aussie dollar. So I might just move on. And then pound yen, no, euro yen. I think you can probably look for a week long on that euro yen. Uh, euro yen. That one. Euro yen. Oh, we're already at highs, right? So you need to wait for a pullback. So that's where the buy is. Demand is right there. So a pullback into a decent level be desirable. And then euro pound, I think you can probably now look for a long on that pound. Actually, maybe a week long, strong long, probably a strong long. Actually, yeah, I would say a week long. On that one, so euro pound, yeah. So any pullbacks, I think, into this area. So when you're looking at the overall highs and lows, right? Highs and lows represent premiums and discounts. So the question is, where do you want to trade, right? The market thought this was a bargain here, bargain here, bargain here, bargain here. So if I'm looking to trade this, I think it's going to have to be somewhere around here, preferably a stop hunt. We might not get a stop hunt, of course, but um, I'm not a beggar, so I can be a chooser. I can choose to wait for a trade to set up, and if it doesn't set up, I'm all right. Um, so just yeah, if you are looking for this trade, then this is where the demand zone is. But I prefer technically to look for a stop hunt somewhere below that before looking to go long. But of course, we may not. Prices may go higher. And if prices actually go higher, maybe make some new highs and it pulls back a decent amount, then that can be also a decent buy as well. But it just depends on which way it goes. So now looking at what else have we got? S&P has pulled back a bit. Let's send that one. Yeah, pulled back to this area. But again, probably just bought up. The path of these resistance should probably still be to the upside because of rate cuts. But again, we could actually get a sell off if the US data comes out on Friday. Yeah. And interest rate expectations for a cut are scaled back. So that would be where the short is. if you can get anything up there. Again, everything else has to kind of align for me to get involved in that. Um, Gold and silver. So silver, look at that lovely move to the upside from a fundamental perspective. But if you're looking for a buy trade, then cool. I think if you're selling, if you're looking for a sell, I think gold, I mean, silver has been this high before, yeah. So, but you can't really use a supply zone from 2011, right? You know, what I mean, that's like 14 years ago. I would say if you are taking any kind of shorts on this, it'd be purely based on the data that comes out on Friday, non-farm payrolls. I think if non-farm payrolls obviously comes out strong, then I think you can probably just end up taking that based on the fact that rate cuts will be reduced, right? Same thing with gold. Gold making all these highs, you can look for a sell base just based off of data. So that's where we are with that. Was there anything you guys wanted to go over, talk about, charts, fundamentals, or anything like that? Anybody? If there's any questions, you can turn your mic on if it's easier. Or if not, just let me know and then I will call this call a date. Going once, going twice. All right, guys. No worries. I will end the call, and if you do have any questions, just post them in the Discord room. If you think of anything later, and I guess I will see you all in the room. Take care. I hope you enjoyed the analysis and found it useful, and I'll speak to you all in the room. Take care.